Hey, ladies and gentlemen, welcome back to the channel. As always, it is Nick here, back with your daily crypto news and analysis. And today we are going to be talking about Ripple and XRP, as well as the vast majority of crypto and finance. And I want to start off this video talking about this tweet here from Anthony Welfare. Now, he is the CBDC advisor over at Ripple, but we do see him quoting this article from CNBC, and this is Jamie Dimon saying this part of the crisis is over. After they just acquired FRC. So what's crazy about this is that we just recently seen a big shift in the market, which I will address here in a second, but we do see from Anthony himself, love the narrative. This is only just the beginning. Check PacWest for the next to fall. Slow motion economic train wreck is happening here and now. And yes, like as we do see this sort of move in the market around, oh, everything's fine, everything's sound, everything's safe. Like that's what we heard last month, right? We've seen the Fed and even the Treasury tell us, hey, your bank accounts are fine, everything's fine. The banking sector is totally sound. Liquidity in the US is at the strongest that it's ever been. Like these are all lies that they are feeding you, and the sheep are following it. Like most people aren't even realizing what's happening within the US. I keep seeing comments on my videos saying, you know, there's good news too. Yeah, there is great news around crypto. But what I'm talking about here is something that I want everyone to understand what's happening, right? We are seeing a collapse very similar, if not much larger than 2008. And I'm trying to explain this to you guys, to wake you up, to shake you out of this dream scenario that people think that we are avoiding this collapse. Like it's not going to happen. This thing is happening right now in real time. And the crazy thing is that they are continuously feeding everyone lies. Check this out. Just in, President Biden says, we are well on the way to stabilizing the banking system. Remember what we just recently talked about yesterday as well. Jim Cramer saying, hey, you know, I call for being bearish when I need to be, like in 2007. But right now, you know, the stock market belongs to the bull. Yeah, guess what? That is not bullish. That is extremely bearish. And also, even Jim Cramer himself is saying that, oh, this is not like 2008 around the banks, which is all warning signs of what is to come, right? But also over here, the banking system remains sound and resilient. The banking system, 3 major bank failures in less than 2 months. This is the nonsense that they are feeding us. Oh, everything's fine. I don't know what world they are living in, but things right now around the banks, it's terrifying. It truly is terrifying. If you have money in the bank, I'm just going to say right now, you are at risk because it seems as though liquidity is at the tightest that it's ever been. Banks are drying up. That's why banks are not lending money right now. And all of this is brewing for a much larger event. We also did see over here from Janet Yellen. Treasury Secretary Janet Yellen says the US could run out of cash by as soon as this June. And by the way, this is all by design. Like this is all pre-planned. They want this to happen. This is what they want. They want everyone to get swallowed up by this crisis just so that they can reprint money. But this time around, it's going to be very different, right? Because now we are seeing JP Morgan be a monopoly player. They are the largest US bank, and they are becoming bigger and bigger by the day. More and more regional banks are being swallowed up by the big banks. And with this comes centralization of the banking system. With this also comes the idea on, all right, if the US banking sector is fully centralized by, we'll say, one major player like JP Morgan, well, guess what? Then when a CBDC launches, well, everything's controlled by basically one bank, so it's easy to invoke that onto the individuals within the US. And I do think that this is all by plan. And also, again, as I've mentioned, this is why getting away from traditional finance is crucial. Diversifying outside of the US dollar is crucial. Also, over here from the Kiyosaki letter, just in, Treasury Secretary Yellen warns that the US will default by June 1st if the debt ceiling is not raised. They just raised it by $1.5 trillion. We know this. But we know that right now, that $1.5 trillion could essentially be swallowed up just as fast as they could raise it. And we do see since January, the US Treasury has been taking special accounting maneuvers to avoid default, which I laugh at. These special maneuvers will no longer help avoid default after this month. If lawmakers fail to raise the debt ceiling, a depression is likely. And yeah, I mean, listen, this is comical because we know that the Treasury wants to print another $18 trillion within the next 7 years. We already know that we're sitting at $32 trillion. We'll be at $50 trillion by 2030. Like, we know that what's happening within the US is absolutely ridiculous. This is a circus show, if you will, around finance. We do see over here as well, CoinDesk, a third major bank has failed in 2023 with the FDIC Gov announcing the seizure of First Republic Bank. Regulators aren't supposed to stop a bank failure. This is a quote from the former FDIC regulator, regulatory Jason over on Twitter. Listen closely to this video. This is what I'm talking about in terms of like the joke that we are living in.
But of course, there's obviously been quite a bit of investigation of the role played by bank supervisors in this case. And I suppose to your point about people feeling as if their own bank, their community bank could be safe, then having confidence in the supervisors to do their job, I suppose, would be an important component of this. Do you think there's much blame to go on that side?
Well, the FDIC just admitted it with their report on Signature Bank, which was rare. But the FDIC did their own review, and they said first and foremost it was management's. The root cause of it was management's failure to properly manage their risk. But then the second point they said is the FDIC was slow to notify the bank about some of it. They talked about staffing problems in their New York region, sometimes taking 100 days to notify the bank of a failure of an SR, which is supervisory recommendation. It shouldn't take 100 days to get out a supervisory recommendation to a bank. When you're at a bank, you're relying on that regulator almost like a consultant with, when you have a suggestion and you feel like something's wrong. And so it's interesting, right? Because we see the regulators may be saying, hey, we maybe can't cover it all, or we're having staffing issues, which I think, at least for our industry, makes it very interesting, right? Because maybe there's a little bit of give and take here of maybe they need more education on things like cryptocurrency and stable coins that might make it easier for them to understand the risk of the bank and what they're regulating. Regulators aren't supposed to stop a bank failure. Bank failures are always going to happen. But what a regulator can do is they can share an idea with a banker about what they might be doing, let's say with uninsured deposits, that maybe a lot of them are crypto deposits, and maybe they need to consider that hot money, kind of like broker deposits, that's going to move faster. It doesn't mean that it's bad. It just means you have to, focus on that risk in a different, more sophisticated way.
So yeah, this is not regulators at all. Regulators are not responsible for this. They're not supposed to stop a bank failure. Last time I checked, I don't understand what's going on with regulators in the US. Apparently they don't do anything. Why do we have these? What are these regulators here for? Just to, give power to JP Morgan? Because that's exactly what's happening. The FDIC is literally handing these regional banks over that are collapsing to JP Morgan. What the hell is going on here? What are these regulators actually doing? Why are we paying these regulators? I ask these questions every single day. We do see over here as well from Black Swan Capitalist breaking: the contagion from the banking crisis is about to leave a trail of destruction. We warned about this back in March. Prepare for a wave of bankruptcies and defaults. A corporate credit crunch is just getting started. There are worrisome signs of corporate distress in the wake of the banking crisis, raising the specter that a pullback in lending will drag down the economy. And this is what I just talked about earlier today as well. We're seeing a lot of warning signs around credit crunches and around bad loans. One of the bigger ones was commercial real estate that we talked about as well. That's another big thing. So as we really kind of as we look at a lot of things happening around the world of finance and the US economy, we are at a major warning area of individuals that have money in the bank and the banks themselves. This is a problem. What do you see over here as well? 3 out of the 4 largest bank failures in history have occurred in the last 2 months, but the Fed is still expected to hike rates again on May 3rd. 86% probability. The new Fed funds rate of 5 to 5.25% will be the highest since September of 2007, near the start of the last banking crisis. Yeah, I mean, this is going to cause a lot of problems, and this is all by design. The Fed is screwing everyone. This is what they want to do. They want to take your savings away from you. They want you to be poor. Check this out. Robert Kiyosaki, again, I don't agree with this guy on a lot of things, but this was something that I seen earlier today, and I just could not help but talk about this. He says that regional banks are being wiped out, calls Fed criminal. So, yeah, we do see down here, we have a few quotes. So one, we do see he tweeted Wednesday, what the Fed? Why is the Fed destroying regional banks across America? Regional banks are the heart and soul of the economy. Fed via the repo market is killing regional banks. Is this intentional? Is a depression intentional? What the F is the Fed up to? Get money out of regionals. And yes, this is why we are focused on those regional banks. I've been telling you guys to watch those regional banks on TradingView because you could see them in real time starting to collapse. But also, you could see what's happening right now around the entire economy as well. There's a lot of problems here. And we do see down here, the ripple effect from what the Fed will bring down the USA. What the Fed wiping out regional banks. And we even do see down here in a separate tweet, by supporting only big banks like JP Morgan, what the Fed wiping out regional banks, cruel regional banks, heart and soul of America. Please support small banks and small businesses. Fed is criminal. Yeah, I do think that this is all by design to usher in those CBDCs. You know, I think that they're giving all the power to JP Morgan. We know JP Morgan has been behind a lot of corruption and manipulation around not only just the traditional world of finance, but also even crypto. So as we look at what's happening within the US, I do think that the game of Monopoly is being played just like it has for decades now. And JP Morgan is the big show. They're the big player one, if you will. So this is definitely concerning. But also, I do want to bring you guys over to this tweet, which I thought was pretty comical. Joe Biden. My economic plan is working. Inflation is up 14% since Joe Biden took office. National debt is up $4 trillion since he took office. The second, third, and fourth largest bank collapses in American history took place under Joe Biden. Global superpowers are quickly ditching the US dollar. Credit card debt is at all-time highs. Build back worse. And listen, politics outside of this, you know, as you really kind of look at what's happening, this is designed. This is designed to screw you. This is what they want. This is why I told you in the video from yesterday that they want you poor. They don't want you making any money. No. This is a big concern to me. And by the way, if you guys do want to know which other regional banks are next in line, well, listen closely to what Peter said in this video, and then I will wrap things up a little bit.
The second largest bank failure in American history just wrapped up. The third and fourth were a mere month ago, with First Republic being sold to the largest bank in America, JP Morgan. Morgan said it will take on all of First Republic's deposits, it's about $92 billion, and most of its assets amounting to $203 billion. Morgan is actually paying, which is a nice change. We, the taxpayers, don't have to pay them to take it on. They're paying $10.6 billion, but it actually books a profit immediately, $2.5 billion, in fact, since the FDIC is sweetening the deal, meaning you are sweetening the deal, with $13 billion in shared losses on the loans, plus $50 billion in fresh financing. So the FDIC's threadbare coverage, already scrounging to just 0.6% of all deposits, gets even thinner. Note, the FDIC already lost, meaning you already lost, $22.5 billion on Silicon Valley Bank, most of which $19 billion will be converted into what the FDIC calls a special assessment, which is a tax on your bank account. They're going to take that nice and slow over the next 4 years, presumably so you don't notice. After all, you don't shear the sheep all at once. Now, Morgan taking on all deposits does avoid the uncomfortable conversation whether indeed all rich depositors, in America have been pre-bailed out by Janet Yellen, which would trigger the mother of all special assessments. And so when the smoke clears, yet another fast-living bank found a new home, and it only cost you $63 billion paid to the largest bank in America. As predicted, the $30 billion injected by major banks a few weeks ago was all covered. Now, attention turns to the other regional banks, some of which are in almost as dire shape. In particular, Western Alliance, $69 billion in deposits, and PacWest out of Arizona, $41 billion in deposits. In fact, hundreds of banks, according to a Stanford study, thousands, are in trouble because of the fastest rate hikes in 50 years. These crashed their bonds, impaired their loans, and vaporized the easy profits they were making paying depositors pennies. In the words of one analyst, this isn't about individual bank runs, it is a, quote, run on the business model. Unfortunately, essentially every bank in America used that business model, loading up on expensive bonds to park the influx of pandemic-era deposits, and then losing hundreds of billions as rates went up. American banks are now sitting on at least $620 billion of unrealized hidden losses. So First Republic was about 5% of that, and we've got 95% to go. So what's next? The Fed meets in 2 days. They're expected to hike rates again to 5%. The market then expects them to stay and chill for a while, and then to actually start cutting rates in November at a steady pace, coming to just 3% in time for the 2024 election. Why flip-flop so fast from hikes to rate cuts? One theory is inflation falls rapidly. Another is the economy gets so bad that the Fed gives up against inflation and just panic cuts. And yet a third, predicted over a year ago by the incomparable Mark Faber, is that the Fed's main goal in life is buying political immunity, economy be damned, and boosting the economy going into the 2024 election buys an awful lot of friends in Washington. Either way, we'll be watching. See you next time.
And yeah, so we know that the Fed FOMC meeting is Wednesday. Big day. Probably one of the most important dates on the calendar right now, because what we will see from there is going to definitely be concerning around the entire economy. And let's see what happens. We're definitely going to be watching it. We're definitely going to be listening in to see what happens. But to me personally, I think whatever the Fed does on Wednesday, no matter if he pauses, no matter what he does, the harm is already done, and it's going to continue to spread like a wildfire. Definitely watch out for those regional banks. And with that being said, I hope that you guys enjoyed this video. If you guys did, definitely leave a like, subscribe, to notifications on if you guys want more free content. You guys are more than welcome to follow me over on Twitter and join the free Discord down in the description below. Us, it's up to you. All have a beautiful day or a beautiful night wherever you guys are on this beautiful world. This has been Nick. Peace out, guys.